Good evening. This is Ken Long from Tortoise Capital with a review of some charts of interest. We're going to take a look at the candle glance version of these so we can see a lot of ideas quickly and looking at all the usual suspects. I like Alcoa here. It's made a nice rebound off the sell-off, powered its way through the 50 and 200-day moving averages on strength, held support at north of 17, and now is postured on continued momentum to go up and test 17 3/4. Low risk trade. Boeing in the same condition, although its distance to the swing high is not nearly as great. Caterpillar, for those of you that love momentum, it may closed at at a recent annual high or 12-month high, and so continued momentum. There's nothing but room overhead. Cisco. I like because it's failed to fail further. You have a defined risk level at 17. If it gets through 18, which is the 50-day moving average, it can go up to 19.5 for the 200-day moving average pretty easily. Chevron is much like Caterpillar, broke out to an all new high among the energies. That's a really good-looking chart and is well postured to go further. So you got price better than the 50, better than the 200. Made a nice rebound, breakout to a new high. Gotta like Chevron. I really like agriculture at this level too. Harsh sell-off. The 5-day down was rewarded. It found support here between 33.5 and 34. The doji right at the confluence of the 50 and the 200-day moving average breaks north of there. It's easy to see how that gets up to 35.5 in a hurry. Blended commodities, kind of the same chart as we've seen on maybe the energies. Broke out high. Now prices back above the 50 and the 200. A hammer doji at the top, though. Not much room to the swing high. Commodities look to be fairly and fully priced right now, but you never know. I mean, a resumption of the trend here could take it through the swing high at 30.6 pretty easily too. EFA in a hesitation zone here. You got the 50 and the 200 crossed over. Couple days in a row where it's trying to decide north or south. There's room for this to go in either direction. I'm expecting a volatile move out of this congestion zone. It can be played in either direction with excellent results. Asia less Japan, not very liquid, but it did have a nice bounce this past week. Swing high at 48, not much room on the upside, but the doji is so small you have a relatively low risk. Brazil has been very powerful, held support on Friday, failed to fail, and even though we got a doji here, I'd be looking to reward momentum inside that index. Love Hewlett-Packard here. Harsh sell-off. It's actually better postured than Cisco, because you can see it's already powered back above its 50-day moving average and held support there, and now a resumption of this at about 43. Looks like it gets to 45 in a hurry. You can compare Hewlett-Packard to Cisco, and I think you can see why that's to be favored. ILF has some nice cycling action here. I like Brazil a little bit better. As you can see, they're both above their 50 and their 200. Either one of them looks promising, and again, I think it's because they are not Japan, they're not Asia, and they're not the Middle East. Intel, not unlike the other two techs that we've seen, although it still has room to go to get back above its 50 and its 200. Still looking reasonable if we see gains in technology this next week. Small caps, very healthy, breaks north of 83, and then it's off to the races. Johnson & Johnson and Kraft both have bounced in the staples sector. I like Johnson & Johnson actually a little bit better because it has more room to go to retest to 50 and the 200 and then up to the swing high. Although Kraft looks very tradable here and actually has better momentum the last 4 days than Johnson & Johnson. Coca-Cola has had a terrific bounce, is right at its previous swing high. If it gets north of 66, though, it's off to the races and gone. You have to own Coke if you're a fund manager. McDonald's still has room to go. Got back above its 50 and its 200. I like all the price action. Looks favorable. Had a nice defined bounce off of 73. It gets to 77 in a hurry. Mid caps are the strongest sector out there. Price well above the 50, well above the 200, and just a little bit of room to break north of that swing high. Microsoft very well positioned here after that long harsh sell-off. There's a washout pattern in there. It's powering north. It gets through 27 and then up to 28 to test the previous swing high, and then the ultimate swing high up here north of 29. That looks favorable. Silver looking a little toppy here, but it did close higher than the previous swing high, and that could be favorable. So a reward of momentum, continued momentum on that one should be rewarded and pile on. Failure, though, gets it down to 34 and then 32, and it would still be very positive, but you can play that with ZSL on the downside if you're looking for tactical trading. I like oil here, held north of its 50, and 3 tight dojis in a row. It's well postured to resume its march north, especially if we get some more meltdowns in the Middle East, which is what looks like is coming. The VIX has made a nice pullback to 30 and is well postured for some more volatility. Volatility was declining this last week, but now the spring is coiled. The VIX is postured for another sharp move. It's a good intraday trade only. Wouldn't hold it overnight. Walmart, much like the other staples, looks favorable, as does ExxonMobil. I like Chevron's chart a little better than ExxonMobil, although even this one is very tradable as well. It can get to 88 in a hurry now that it has broken above its 50, above its 200, and the fact that the 50 never even crossed below the 200 has got will be seen as a very favorable technical posture. So those are the charts of interest. We got a ton of things to look at for the week ahead. I especially like the momentum plays there in Caterpillar and Chevron, ExxonMobil. I think Alcoa offers some. All the techs are looking reasonable too, and DBA in the grains. So good hunting, and we'll see you in the chat room.